Hey, thanks, Joel. Thank you, everybody. Um, so I guess, for me, like wearing my investor hat, personal tokens, like the opportunity there is potentially one of the largest economic opportunities, certainly in blockchain, but also probably like in general. And I want to kind of pull us back a little bit, maybe to like a higher level here, and just maybe put personal tokens in context, and then maybe go a little bit deeper there. So, for me as an investor, thinking back to 2015 as I was starting our fund, really the thesis was not around cryptocurrencies. It was actually quite the opposite. I am not a Bitcoin maximalist. I'm more like a network pluralist or token pluralist. And as I was starting the fund, I was just really thinking about like what are all the other applications of blockchain besides cryptocurrencies that might be interesting in the future. And implicitly that came with the understanding that tokens themselves, starting from the Ethereum white paper, really play a strong role in this. They have a wide design space and should proliferate. So like this was really, there's a talk from Andreas Antonopoulos. It's called The Future of Bitcoin. It came out in 2015. And in that talk, he really has only like one primitive to work with, which is the primitive of a cryptocurrency. And he sort of asked the question of how many cryptocurrencies will there be in the future? And the quote is, to ask how many cryptocurrencies will exist is to ask how many bloggers there are on the internet. The answer is simple. It's all of us. Currency is now a means of expression. And so that, that really like resonated with me. And I see Simon nodding his head as well. Right. And really formulated a lot of the ways that I thought about the space and really the way that we think about the space implicitly. And so what I posit is that really like, as participants in blockchain and as investors in blockchain and individual supporters of the space, whether implicitly or explicitly, what we're really investing in here is a kind of thesis on token proliferation and the value capture of the value that we create within those tokens, all of which experiment, of course, is ongoing. But I'm happy to report that after some years, there are today 276,519 ERC20 tokens on Ethereum, and something like 6,118 ERC721 contracts, which of course each come with a whole library of individual NFTs. And so we can't say that we haven't progressed deeper into this idea of token proliferation. I think value capture, is a more sort of longer term experiment, but in 2017, we were seeing a lot of utility tokens, and the value capture of those models was highly questionable, probably still is questionable, but we also see a lot of different models. And the beauty of blockchain is that we can iterate and have models that eventually achieve the goal. And so just now, we're starting to see within DeFi models which aggregate revenue, can redistribute that through governance tokens to shareholders, and therefore actually have future cash flows that are familiar to valuation analysts. So where am I going with this? Well, because if we look at what token proliferation looks like today, the vast majority of these assets that are here in the market are not cryptocurrencies, as we posited. They are in fact probably mostly network tokens for protocols or DeFi products. They're wrapper tokens that represent interest in liquidity pools, in lending. Someone had a tweet the other day that said BTC is DeFi, and then someone wrote back, no, WBTC is DeFi, and then I wrote back, no, CWBTC is DeFi. And so it gives it gives us a sense that really it is the proliferation of DeFi tokens at this moment in time that is kind of driving token proliferation. But the real question for everyone is what's next. And what's next is probably a few things and things we're not even thinking about, but one of them might be community tokens. So we've seen Reddit this year go into an experiment in that sense on the Ethereum testnet. If you think about how many communities there are on Reddit, if you think about how many people there are on Reddit, doing something like that on that scale is going to have a massive impact on token proliferation in the space. And then, of course, if you think a little bit forward, the idea of like personal tokens suggests that there's a substrate of individuals in the world that can create like substantially more tokens than that, right? Than there are communities on Reddit. And so this idea of like token proliferation, like when I think about personal tokens, it's really about like asking the questions of like, where are tokens coming from, why, and who's likely to tokenize what next. It seems to me that personal token models are an extremely interesting space. We haven't even started here, but I think the growth potential just in the number of such assets is huge. So again, going back to the investor perspective, or maybe any individual who wants to deploy capital in blockchain, doesn't have to be a fund these days at all. How do you invest in personal tokens? Well, you can back people who you know. You can certainly buy tokens on the market. More interestingly, you can provide liquidity for tokens. And even more interestingly, as an investor, you can invest in platforms. So what Chris is building at stakeonme.com and Me Tokens, right, is an example of a platform which has potentially this very interesting model of this kind of diversified optionality, where what I mean by that is the marginal cost of delivering a token supply, because the technology is so efficient, is nearly zero. And in fact, people pay for it themselves because they're doing that using an Ethereum transaction. While the upside of a particular token supply is theoretically infinite. Like you could have invested in Jeff Bezos potentially back in 1992 if we had blockchain, right? And now he would be worth a lot of $100 billion plus, right? So the really attractive idea in platforms like Roll, like Me Tokens, and anyone else who's contemplating this kind of thing is this really disproportional upside where you very cheaply provide the service of tokens, but you're really investing in a diversified portfolio of thousands or hundreds of thousands or even millions of people, some of which undoubtedly will see some success and create a return. So that's very cool. And then what are some of the issues of personal tokens? Well, I think one of the challenges here, and this is something that we need to flesh out kind of as users, investors, founders, followers, etc., is that the design space of tokens is really, really wide, right? So I've heard, I actually did an experiment where I created a Jake token on Me Tokens. I also used it on Lauren's platform, micro sponsors. A lot of people have done similar experiments, but everybody uses this token in a different way, and there's no prescribed model yet that has formed. And there's also sort of sharp edges because you can, because the design space is so rich, you can create something that looks like a coupon, you can create something that looks like a security. It all depends on what you say the token does, and all depends on the facts and circumstances of how you treat it. One thing I learned from the Me Tokens and micro sponsors experiment, interestingly, is that I think integrations into different products of personal tokens are going to be critical to the success of personal tokens. So as someone with a token, right, I'm going to have a very hard time, or I should say I will have a much easier time to promoting it and getting it out there and building a community for it if I'm able to use it on third-party platforms. And what I mean is I went and I auctioned some of my personal time on micro sponsors, but I was able to accept payment in Jake token. And I think there's a few other examples of that. For example, if you know Kanye Digital's coin Hue, Kanye Digital's Hue is accepted on OpenSea on certain listings as payment. But really what you want is like for someone to bring their own transaction currency to whatever platform they're transacting on, right? You want to enable, I don't even know what it looks like, it could be a standard or a protocol where someone can accept payment in their own currency wherever they go. Another interesting thought is that, of course, you know, Jake coin came first, but there's 10,000 million Jakes in the world, and it's really confusing and challenging to try to think about, like, how do you differentiate those personal tokens from everything else. And it says to me, like, using my technology brain, that we probably also need some kind of standard for token naming and enumeration. We definitely have things like that in the real world, like QSIPs and ID numbers for stocks and so on and so forth. The last thing to say, and then maybe we can kind of have a discussion and questions. But the last thing to say is we are in the middle of an event where DEXs are coming onto the market at rapid speed and really innovating on what liquidity looks like. So, you know, I remember back at the end of 2016 writing the year in review at CoinFund and saying, oh, you know, DEXs appeared on the scene this year, but like really, I think they're going to take off next year. It took quite a number of years more to build up the infrastructure and the right tools and the innovations of automated market makers to get where we are today, which is still very early. And to give you a sense of where we are, you know, the blockchain space has about like $50 billion of daily exchange liquidity. And about 2 weeks ago, all the DEXs and AMMs and everything combined was about $80 million a day. So like huge, huge space to grow there. And then today, it's more something like 160. So just in 2 weeks, the DEX liquidity has doubled, mostly driven by interest of DeFi and so on. This is important for personal tokens because, of course, the kind of the core problem of a token is to find a market and to form price and to form enough liquidity so that the users can generate can generate interest and can transact in that currency. And one of the reasons why I asked Mike what your market cap was is because I also know like that you have been in the market for a while, right? But without those kinds of open secondary markets, it probably was quite challenging to get people on board to trade the token. And so what I'm saying is, given the openness of this ecosystem, the time to liquidity of a personal token is now rapidly approaching zero. And it's still probably harder to bootstrap a personal token than it is to bootstrap a liquidity mined, network asset like we just saw with Meta or MStable protocol, what we just saw with Balancer, what we just saw with Compound, what we're seeing with Wi-Fi or however you pronounce that. But basically, like as this space grows, like the infrastructure for personal tokens becomes really, it becomes really easy to use and becomes almost like instantaneous to get these things up. And so what all of that makes me think is, philosophically, sort of directionally, operationally, and innovatively, we're heading for a world where these things are essentially inevitable. And that's why I think it's a big opportunity. But there's also, that's not to minimize the sort of amount of work that we have to do to streamline, the interoperation of all of those things.
Jake, thanks. That's very helpful. Do you have a specific opinion, and feel free to ask your questions, or anyone else, but do you have a specific opinion on the bridging between the traditional celebrity world and, as Adam was saying kind of at the outset, he's like, it's regulation, compliance, all this stuff is a real big challenge. And, until those problems are solved, you're never going to really be able to build like a Kickstarter for tokens or anything that would kind of onboard that traditional market segment, similar to what Mike said, as a lot of his people would have never participated in a kind of crypto native solution. And, do you think there's a way to bridge that gap? And if so, what is it?
Yeah, I think there's like a practicality, and then there's the theory, and then there's the practice, right? So the theory is, our influencer is going to use these things. Our influencer is an effective way of proliferating tokens and also popularizing tokens and making them work well. I think the answer, based on things that I've seen, is emphatically yes. I've definitely seen projects that have been able to get large audiences by taking a strategy where they take influencers who themselves have audiences and sort of like onboard their audiences and bootstrap platforms this way. We also have tons of data in blockchain about how liquid tradable tokens that are transferable, et cetera. And by the way, and I've done a lot of work on this in a real securities context at Props Project, who's one of the first Reg A Plus tokens. But we have a lot of data to show that actually they do create a ton of engagement. The practicality is just making it, making it a space that has paths for entrepreneurs to use this, for people to use this, and that's always a challenge, and it's always a negotiation with regulators. But overall, I feel like it's something that we can overcome. There are definitely use cases for personal tokens where it doesn't have to be like a security or something. It can just be like a form of payment for a store or a community. There are certainly conversations that need to be had there, but I also feel like, regulatorily, we're probably positioned in a way that we'll have those conversations and we'll bridge that gap eventually.
I guess part of the, intrinsic question, and, I don't know if here's a kind of thing from wider society, is that, both Kanye and Brock Pierce decided they're going to run for president right now. I don't know quite how serious necessarily either of those attempts are, but, Kanye has a large reception in the world. Everyone knows who Kanye is. Even if you're talking VCs, they somehow managed to bring Kanye into the conversation. And then Brock Pierce is sort of a crypto guy. Obviously he did some Hollywood stuff when he was young, but do you get more mileage? And I guess sort of question here from or I guess it's kind of, which side of the fence would you bet on? Would you bet on a pre-existing celebrity kind of leveraging some of this technology and then somehow boosting his own brand reach that way? Would you bet on a crypto native celebrity who's sort of grown up in the crypto thing, somehow getting enough momentum that it sort of cascades into becoming a sort of, broader influencer that exists outside the crypto world? Or potentially both, but I don't know.
It's a great question. I think the intellectually lazy way of picking opportunities is to say, market caps are proportional to attention. If you're an influencer and you have a bigger audience, you're likely to form a market faster, and so therefore you should invest in kind of bigger names that will get a lot of attention. But that's intellectually lazy, because you're foregoing the opportunity, which is really the blockchain general opportunity that levels the playing field between people who didn't have that kind of attention before, or didn't have economic opportunities before, and yet are equally or more talented than quote unquote other successful people. So the real opportunity there is to enable, how do we put it, underappreciated or sort of people who didn't have these kinds of opportunities before. You enable them to be talented, to convert their talent into economics. And those opportunities, I think, are, while less safe, like more volatile than a surefire, like I'll invest in a Britney Spears coin, are actually much more interesting and also much more lucrative in the success case.